Yes, Brazil's risk has changed over time, specifically with regard to inflation. Back in 2015, we saw an elevated level of inflationary risk. The currency was depreciating, and so this was impacting inflation expectations. As inflation rose, this was of concern for some of the consumer stocks in our portfolio. So we would have taken that, seen that risk, and then adjusted our PE for consumer stocks downward to account for the possibility that maybe these stocks wouldn't be able to pass on inflation to their consumers and their earnings would be hurt. Fast forward to early 2018, we saw inflationary expectations start coming down. At that time, we would consider going in and looking at those very same stocks, consumer stocks, and perhaps removing that discount because of the fact that inflation was starting to come down due to the control by the authorities on the inflationary environment.
One example I could mention about how the country changes in the country's model inform our investment process is perhaps Russia in 2014-2015, as we saw that weakness in the currency was perhaps the overhanging risk in its economies. We review our portfolio, revise our price targets, and we found significantly more upside on the exporters, on the commodity producers than in domestically oriented companies. Over time, as the situation normalized, interest rates lowered and the currency stabilized, what we found is that the risk profile was changing, and we updated the multiple that we were expecting to pay for some of the companies domestically oriented, whereas perhaps the companies that had more exposure to the foreign markets were not benefited from these upgrades in the domestic market.